You've definitely seen this online, right? The challenge. Take a tiny amount of money, just $100, and turn it into something serious. It's super captivating, really motivating, but is it actually possible? We're about to break it all down. So let's just ask the question head on. Can you really take a single $100 bill and multiply it 100 times over to get to 10 grand? It sounds a lot like a get-rich-quick promise, and we all know how those usually turn out. But beyond all the hype, there's a really fascinating strategic question here about how wealth is actually built. So here's our game plan. We're going to tackle the big question, explore two different ways to get there, what we're calling the fast lane and the steady path. Then we'll get a dose of reality before we uncover the ultimate strategy that actually combines them both. To even start this journey, you have to understand that there isn't just one road. When it comes to growing money, you're immediately at a fork in the road. It's a choice between two totally fundamental philosophies. And that choice really boils down to this. The fast lane is all about actively making money. It's high effort, it's fast, and it's high risk. On the other hand, you've got the steady path. This is about passively growing money. It takes a ton of patience, it moves slowly, and it's got market risk. Honestly, it's the classic sprinter versus the marathon runner. Let's talk about the fast lane first. This is the entrepreneurial path. This is where you use that initial $100 as seed money for a business, no matter how small it is. And this quote just perfectly captures the mindset you need. See, the fast lane isn't about getting lucky. It's about treating that $100 as a tool to build something real through strategy, creativity, and most important of all, action. So what does that action actually look like? Well, first you could flip stuff, buy undervalued things at thrift stores or garage sales and then resell them online for a profit. Second, you could sell your skills. Use your $100 for a small ad or to build a quick portfolio and land freelance work on sites like Fiverr. And third, you could create a digital product. Use a tool like Canva to design a planner or a template, then sell it over and over and over again on a site like Etsy. Okay, let's switch gears and look at the other path, the steady path. If the fast lane is about actively making money, this one is all about patiently letting your money make money for you. This is the investor's route. Now, the engine behind this whole path is one of the most powerful forces in finance, compound interest. It's pretty simple, really. It's the idea of earning interest on your interest. So your money earns a return, and then that return starts earning its own return, and it just creates this snowball effect that grows exponentially over time. It's amazing. And to really see how that snowball grows, let's look at the numbers. At a pretty standard 10% annual return, your money doubles roughly every 7 years. So your $100 becomes $200. Then 7 years later, it's $400. Then $800. The power is just undeniable, but so is the timeline. We're talking decades here, not days. And succeeding on this path isn't just about sitting back and waiting. It takes a methodical approach. You've got to set clear goals, diversify your investments so you're not putting all your eggs in one basket, and use time as your absolute greatest ally. At the end of the day, it's about discipline, not drama. Okay, we've explored two pretty exciting paths, but now it is time for a serious reality check. Because let's be honest, if growing money were as simple as these paths sound, everyone would be rich. Let's talk about what the online gurus often forget to mention. Let's start with this brutally honest quote from a Reddit day trading forum. These are people who are in the trenches, trying to make money every single day, and their consensus is crystal clear. If it sounds easy, it's a lie. They're telling you it's a scam because they know the real hard work involved. And hey, even the legendary investor Charlie Munger agreed with this. He famously said that the hardest part of building wealth is the first $100,000. So if getting to that level is a long struggle for one of the best investors in the world, we've got to respect that our $10,000 goal is definitely not going to be a walk in the park. So here's the crucial takeaway. Neither path is a shortcut. The fast lane, that's just a catchy name for starting a business from scratch, with all the headaches and challenges that come with it. And the steady path isn't just about waiting around. It's a multi-decade marathon of discipline and patience. Both of them demand serious work. So if both paths are so hard, is there a better way? Well, yes. The ultimate strategy isn't about choosing one path over the other. It's about combining the speed of the fast lane with the strength of the steady path. So here's the playbook. Step 1, Generate capital. Use those fast lane methods, the flipping, the freelancing, to build up your investment fund. Step 2, invest that capital. Take every single dollar of profit from your hustle and feed it into the steady path. This is how you fuel your passive growth machine. And then, step 3, practice patience. You just continue the cycle, knowing that real wealth is built by combining consistent action with the incredible power of time. So why does all this matter to you? Because it means you don't have to choose. It shows you that your active efforts today can directly power your wealth tomorrow. It proves that starting small, even with just $100, is incredibly powerful as long as you have the right strategy. And it reminds all of us that true financial growth isn't a sprint, it's a marathon that's powered by both speed and endurance. The theory is done. The roadmap is clear. So the only question left is the one that really matters. Your journey starts right now. What's your first step going to be?